This is why you should invest in crypto ASAP. Bitcoin has grown from around $1 in 2011 to today's levels at above $60,000. All this is just the space over a decade. As many of you know, many cryptocurrencies are very volatile, so the price will be changing all the time. But the increase from $1 to today's levels is pretty insane. Even though many of the well-known cryptocurrencies are what some might consider high-priced, the crypto space is still very young, and there will be a lot of opportunities shortly. More people are looking into becoming a crypto investor, and it's becoming more and more mainstream. Cryptocurrencies are a new way of decentralizing your money, and it makes it very difficult for the government to control, which is appealing to many people. What makes this even more exciting is more and more financial support from different institutions. More giant institutions such as Microsoft, Home Depot, Starbucks, Whole Foods, and Tesla are putting cryptocurrencies on their platforms as a form of payment. Microsoft was one of the first giant institutions to accept Bitcoin as a form of payment. And on their Xbox store, you could pay in Bitcoin as far back as 2014. Tesla announced the purchase of $1.5 billion worth of Bitcoin back in February of 2021. But later the same year, they announced that they would sell all their Bitcoin. The reason behind this U-turn was that the electricity behind the huge Bitcoin mining rigs in countries like China is powered by all other things than renewable energy. Tesla says that they will start to accept Bitcoin again when Bitcoin mining is powered by 50% renewable energy. Maria Paula Fernandez from Golem Network has talked about the likes of investing in cryptos such as Bitcoin and Ethereum, and that it's a natural way to protect the public from the fragile and traditional financial systems, as they are both assets that do not require third party to verify transactions or a big administration that's expensive. This is something that can be looked upon as taking power from the hands of the banks and the government and giving it to the investors. 1. So what is cryptocurrency? Crypto originates from the word cryptography and is the discipline of writing and solving codes. Currency is easier to explain and is any form of money you can exchange. We as a society are taking decisive steps towards a decentralized currency. This is a method of transferring wealth without any form of third parties. One of the most critical factors of a decentralized currency is that the network that the crypto is based on cannot be altered or deleted, and it makes it hard for anyone to manipulate data stored on the network. This is because the information is stored all over the network. On the various well-known cryptocurrencies you have today, anyone can verify someone else's money. What makes this work is that there are constantly volunteers adding data on a public digital ledger. This digital ledger is what is known as the blockchain. The whole reason behind a blockchain is the transparency that it brings to the public. Unlike what a normal centralized ledger, where only, for example, a bank has a list of all the transactions. Blockchain is a digital public ledger. What this means is it's a database that is consensually shared and synchronized across different websites, institutions, or different geographies, and it is fully transparent. Any changes or addition made to the ledger will be reflected in all of the public, and this is in a matter of seconds. This is what makes this so decentralized, is that no single person or group has control. Rather, all of the investors maintain control at all times. 3. What is crypto mining? When you are mining crypto, you are a volunteer that is verifying the volatility of digital transactions on the said crypto network. Working as a miner on a network, you contribute a block of information to the blockchain. Essentially, you have a mining rig solving really hard math problems and complicated codes. All this to verify transactions and identities. As mentioned earlier, Tesla stopped their acceptance of Bitcoin because of the way big mining rigs in China were fueled by dirty electricity. These mining rigs require a lot of electricity, and especially with Bitcoin, it takes a lot of energy just to maintain the blockchain. The way a miner gets paid on their investment is when they successfully add to the blockchain, where the miner gets paid with a certain amount of crypto coins. This is also the only way that new coins will be added into circulation when a miner adds to the blockchain. You don't normally need a crazy mining rig to earn some passive income. You can have a hefty computer with a strong graphics card, and this will help you to generate a couple of dollars each day in Bitcoin. 4. What are the popular cryptocurrencies? Bitcoin is, of course, the original cryptocurrency. Today, there are created new forms of coins every day. Right now, some of the biggest coins are Bitcoin, Ethereum, Tether, Solana, Polkadot, Litecoin, Dogecoin, and so on. The thing that dictates the value of cryptocurrency is what dictates any form of asset: supply and demand. What one person is willing to pay for the crypto and what one person is willing to sell it for. If you have a lot of demand for a coin but not enough supply, the value of the coin will rise as more people are looking to buy the coin rather than sell it. This is the normal form of valuation of a coin. However, you have other forms of valuation, like what happened to Dogecoin. The whole concept behind Dogecoin started as a joke, a meme coin, and was early on advertised through Elon Musk's Twitter, which resulted in astronomical movements in the prices. Moving on to Ethereum, which has proven itself to be more efficient network than the Bitcoin network and brings utility to the table. What I mean by this is that Ethereum is enabling the deployment of smart contracts and dApps to be developed and run without control or interference from an external third party. The cryptocurrency market is still what some would call a very speculative market, and with speculations comes risk. With all investments, there is a risk, but if you have been into the crypto market, you know that even the well-established crypto is volatile and somewhat temperamental. There are many other forms of investing that you may think are safer, but it's undeniable that many cryptocurrency may appeal to you regarding their latest annual market runs. Even well-established coins such as Bitcoin and Ethereum have big short-term price movements. That's not normal when it comes to classic investments, such as stocks or property. If you want a long-term winner, it will probably be Bitcoin and Ethereum. These coins are relatively stable compared to many other coins, but once again, they are not stable compared to classic investments. There are a lot of people that are making a lot of money in the crypto space today, and these are the stories that you are reading about, not the people who have taken big losses. You rarely come across someone advertising their losses to the public. When you start investing in cryptocurrencies, it's important to store your coins somewhere safe in crypto wallets. Cryptocurrency wallets are software linked to the blockchain that will monitor all the activity in your wallet and execute your transaction. The wallet operates like a normal bank account with a public key. This is your address where people can send you cryptocurrencies, and then you have your private key. By having this private key to your wallet, it will help you validate transactions and verify your public key. You have various forms of crypto wallets. You have your hardware wallet, which stores your crypto offline and is considered to be a very safe way of storing your crypto. A mobile wallet is a different mobile app, and your crypto is directly stored on the app. A desktop wallet is installed on your desktop and has more advanced settings than your mobile app. And finally, you have your paper wallet. This wallet is considered very safe as well, and is a document that includes your key and QR code. To steal this, you would have to steal the document. To start investing in crypto now, the steps you need to take are: open an investing account where you can trade crypto. Examples of platforms are Coinbase, Robinhood, and Binance. Do your research and invest in coins you believe in. You need to get a grasp of what you are investing your money into. Like in any form of investment, you should only invest what you can afford to lose. Since crypto is relatively volatile compared to your classic forms of investment, an idea could be to invest with a horizon of months and years. The crypto market is relatively young, and there will for sure be many exciting opportunities in the future. This is a sign that you should never stop researching and get complacent. Always strive to learn more. Hopefully you enjoyed the video. Make sure to subscribe. Also, check out my other content as well.